Prashant Jain joins us now, and good morning. Thank you for joining us. ये उल्टा पुल्टा हो गया अभी तो.
So are you surprised or not? Let me ask you that.
Yeah, exit polls are the best that we have to go by. So to that extent, I think one is surprised. Yes.
I think we can tell by his expression he is surprised.
What are markets prepared for? What are not markets prepared for?
Markets, I think, are clearly pricing in political and policy continuity.
Okay. So a big mandate or a clear mandate? Is the clear mandate will also be acceptable for the market?
I would think so.
Okay. So it doesn't matter whether it is 290, 310, 330, those numbers don't matter. As long as there is policy continuity, markets would say, okay.
I would think so, but see, markets went into this with whatever exit polls were saying. So to the end, markets, I guess, were pricing in a lot of optimism. And when I talked to people, they were saying there is a post-election rally on the cards. So I think whatever reaction you are seeing today is also a result of that.
You liked PSUs and you bought into PSUs when nobody liked them. Now everybody likes PSUs. What are you doing?
No, I think the markets have moved beyond that phase where they used to differentiate between PSUs and private. So I think businesses are now getting discounted or they are trading as per the underlying fundamentals, which I think is very good. So I think while we still talk in terms of PSUs, non-PSUs, but markets are not differentiating between public and private enterprises anymore.
Irrespective of the verdict, will anything change in the way you've structured your portfolio?
I don't think so. See, the key to watch out is, to what extent you follow fiscal discipline and to what extent your allocation towards infra continues. I think that's the key two things to watch out for, I would say.
One more follow-up question. I'm purely looking at last 10 years of journey. First tenure of the Modi government was about getting the house in order, repair the balance sheet, recapitalize banks, fix the power sector, fix the core sectors. Second tenure was marked by COVID, but is also marked by PLI schemes, manufacturing boost, defense. Which is, if you bought into defense stocks in Modi 1, you did not make money. You made money if you bought into defense and railway stocks in the tenure 2. What would you like to buy in the tenure 3, which could be different from tenure 1 and tenure 2, assuming that we are talking about policy continuity?
So I think, Nikunj, there is no big mispricing in this market.
Okay.
And almost all sectors are, I would say, reasonably close to the underlying values, and so it is a challenge to point out a theme, an outlier theme. I still feel the larger companies probably are better placed, the large caps, and I would feel the banks have underperformed, and there the valuations look quite appealing. So I won't argue for massive returns even there, but still I think on the margin, in a relative sense, large banks look best placed.
But Prashant, is that thesis about large banks irrespective of what happens today, what the election verdict is?
See, if the election verdict is not to the market's liking, you will expect a meaningful correction in the near term. That's very simple. And when that happens, almost everything will fall. But I think, yes, if you think longer term, 2, 3, 5 years, I think banks should still do quite well.
The other thing that we've been hearing a lot about is of late consumption and the lower end of consumption, which is underperformed. Is that something that you would start looking at positively now?
As things stand today, I would say they still appear to be very expensive. Unless and please remember, last cycle when they underperformed, the underperformance lasted for almost 8-10 years. It was largely a time correction. So stock market cycles can be very, very long. But In case there is a realignment or change in policies and focuses more on distribution, bottom of the pyramid, then that would certainly be perceived as positive for that space.
But urban consumption no longer, where value lies or where you are willing to pay that, premium for the growth it's providing?
See, I don't think we should divide. See, the divide, rural-urban divide is fast shrinking, and the consumption habits even in rural India are basically coming. It's basically about income levels and not about rural or urban. So I would say the low penetrated categories is something where makes more sense from an investment point of view.
Okay. The original PSU bull is actually Prashant.
Yeah.
I'm
He's
talking
the
of 7
original
years
bull in-
back when I track and I used to PFC REC 90 rupees, 85 and downwards, Bank of Baroda 100 rupees, Coal India, I can give you a list.
Did you
is
invest
when
in his fund that time?
HDF, yes, I did buy the fund, I bought the
Then kya
stocks.
wajah?
I bought the stocks, I used to follow, so I know Prashant since many years back.
He's
When-
accepting public money. You can invest with him now, right?
And
Prashant,
he-
what's the next 7-year call now?
So I think these are compounding markets. See, these markets, the multiples are about 10 and 20% higher currently
Of course.
than 10 and 15-year averages.
Yeah.
I think that can be justified because India's growth rates are accelerating, and we have seen GDP growth numbers for this year and the previous year. I think the cost of capital in India has gone lower. So the gap between Indian and US yields is down to all-time lows. So low cost of capital means higher multiples. And third, the local participation in equities is quite secular and very meaningful. So because of that, I think the volatility of Indian markets is headed lower.
We'll show you that data, sir. And that's the data which you've been discussing and we've been bringing it out, the SIP number. And that I think is the most magical number. कहते हैं ना magic. That is the magic. And that data point will just come up on your screen. Prashant, you may want to just look at that data. When you look at that data, you say, screen पर आ जाएगा सामने. Right, left देखो थोड़ा मिल जाएगा. Okay. SIP in 2014 was about 1200 crores. Now it's gone to 20,000 crores. So for me, this I think is the most important data. Foreign institutional investors this year have sold 1 lakh crore. In last 1 month, they've sold 42,000 crore. So वो ज़माना था कि FIs would sneeze and markets से बुखार हो जाता था. Like they say in English, when FIs would sneeze, markets would get flu. That time actually has changed. That is something which is very, very important for us. I'll go back to a very basic point, which is that India is trading at a premium. The reason why trading at a premium is because markets can see visibility. One of the aspects for visibility for last years, 10 years, has been policy continuity and stable government. Do you think a weak government, when I say weak government, the current government comes back, just they manage to finish the finishing line, so to speak, they just hop across, they don't jump across. What happens to the so-called policy premium in that case?
So I think markets would still expect policy continuity.
Okay.
And
Current government coming back with a clear majority, there will be no worry from a market standpoint on policy continuity. Can I say that?
I would, in my opinion, I think policy continuity should be there.
Just take a moment to kind of mark what's happening in the market because there's a 450-point recovery from lows. So at one point of time, we went below the mark of 22,400, but we are right now staring at 22,800. So as the numbers keep on coming in and the fact that for now there's a lead on 300 points, the market is digesting that as well. So it continues to be fairly volatile. India VIX is up almost 20% right now. It's reached a level of around 25, and that's going to be the nature of the game throughout the trading session today. So, okay, India VIX has actually come off sizably as well. So, India VIX at one point of time was up 18-19% at a level above 25-26. Now it's come off. So, and my guess is as we progress through the day, all of these adjustments will keep happening. But for now, a bit of a recovery on the cards.
But Anisha, what's surprising is look at the names which are moving up, and it's all FMCG names. Dabur is up 4%, Unilever 2.5%, Marico, Colgate, Britannia. These are your top 5 movers, and I'm talking about the F&O markets right now. That's where you're actually seeing spots of green. So the market in that sense is, I mean, it's just such a beautiful instrument. How quickly it's readjusting to the moving dynamics right now. And all those movers, your Adani names, SBI, ONGC, L&T, even private banks, of course, they are getting all clobbered
That's
down.
how
It's a
markets
mirror
move.
image.
That's how markets move. Defensives
Yeah.
come back. I don't think IT will come back because growth is not there. But that's how markets are, right? I mean, nobody wants to leave the market.
Actually,
You want
TCS
to
is up
switch.
0.5%.
Yeah, growth नहीं है भाई कितना.
But yeah, anyway.
5% growth.
But
है.
yeah, Prashant, you were telling us about your next 7-year idea. 7 years back, it was PSUs.
And it cannot be a SIP. Huh?
Where
It
is
cannot
it?
be a SIP.
No, I think
Where do you see money being
buy
made?
Indian equities, because India's growth is accelerating. You can't ignore that. Our cost of capital is lower. You can't ignore that. The local flows are sizable, and our bank balance sheets, company balance sheets are extremely good. Our current account deficit is low. The external environment is very conducive, whether you talk about manufacturing or about services. So I think I would be positive on India. I would continue to be positive on Indian equities. And see, please appreciate what happened yesterday. If something moves up 10%, 12%, and it is pricing in a lot of expectations. After all, what changed in a single day yesterday? Nothing.
We are still up from Friday's close.
Yes.
With all the mumbo jumbo, with all the volatility, you add today's loss and yesterday's gain. We are up 1% from Friday's close. So much so, when you go higher, if you fall by one story also, it looks like a steep fall. But logically, you're only down by one story. On the peak of the mountain, you come down by 10 meters, you would say, oh my God, gravity is at work. No, it does not work like this. It is that you are still higher than what the Friday's close was. Okay, one conversation we had when we met last time, you said that you like power. Indians will consume more power. Heat waves will be coming. Air conditioning penetration will increase. And that is something which is playing out beautifully both at the demand front and at the policy front. This is one space where big changes will happen. Solar, wind, thermal, hydrogen. How do you see this space moving?
No, I think this space has re-rated massively, and I think it is now over longer periods one can still make money. I think, but it is in the nature of growth. I think these stocks, to my mind, are trading broadly at fair value levels. I mean, no scope for re-rating essentially. And see, while a lot of investments are needed, but the ROEs are in a way capped in this space. So you can't lose sight of that. Earlier they were trading at 0.2, 0.3 times price to book, but now most stocks are between 2 to 3, 3 to 4 times price to book value. So I would be optimistic, but I would have very reasonable return expectations in that space.
And what is that reasonable return expectation, let's say for the next 12 to 18 months? Is high single digit what you should be okay with, or do you think the average which is there of 11 to 13% thereabouts is still going to be there?
So India's nominal GDP is growing around 10-11% because we are fundamentally a lower inflation country. So I think to that extent we need to reset our long-term return expectations from the markets lower.
If I literally had a gun and if I could put a gun to Prashant's head, क्या लगता है? He would say small cap अच्छा नहीं लगता है, mid cap अच्छा नहीं लगता है, large cap में margin of safety है. I don't have a gun, so don't worry.
He said that already, by the way.
No. But this time if I put a gun to your hand,
No, I think Nikunj, I mean if you push me, I will take a minute and I'll say this debate of large and mid is often misplaced or small. The real debate is between companies that have a right to win in the marketplace and companies which are weak. So you can buy large companies that are weak and there can be small companies which are very strong. So the real, to my mind, the best way to do it, focus on strong businesses that can win in the marketplace. Don't overpay.
is your old franchise looking interesting now?
Old franchise.
The stock's gone through time-wise
I think,
correction,
as I said,
price-wise
large banks. I mean, you can see price to book values.
We get a declared portfolio now, whatever
Yes.
is in the public domain. You bought into names which, in a sense, some would say why. Let's say you bought into Senco, you bought into Zomato. Is there a thought in which end of the consumer market you're betting on? Because one is a jewelry company, one is a food delivery company.
So as I mentioned to her some time back that consumer discretionary appears to be more positive to me than consumer staples. And so we have bought into consumer discretionary names. And in some cases habits are changing, in some cases markets are moving from unorganized to organized. And I think both of these are plays on that.
If one looks at the market, and this is a data which you may just want to pay attention to. The 1 month change after the election, 2014 and 2019, बचिन साहब एक data देखते हैं. The market have not given you gratifying returns because a lot of good news that it tends to get priced in. But you take the time horizon from 2 to 3 years and 3 to 5 years, great wealth has got created. So can I say that today, tomorrow, this week, next week, ahead of budget, post-budget, ahead of US election, post-US election, the theatricals in the market will continue. We'll continue to discuss and debate. But next 2 or 3 years, बड़ा पैसा बनने वाला है.
No, I'm glad Nikunj you said that, because shorter term markets are volatile and it's very hard to to forecast. You can't forecast the outcome of a toss of coins. Markets are exactly like that. But I think yes, if I take a 3-5 year view, I would be optimistic on these markets. And I will come back to what I said earlier. Inflation in India is structurally low. You are dealing with a 4-5% inflation. So your rupee GDP growth is lower, and to that extent I would say 11-12% longer term nifty compounding appears to be reasonable to me.
Okay, on that positive note, Prashant, we'll let you go. Thank you so much.
Thank
And
you.
I'm sure you're going to be closely tracking the leads so far. So far, it seems like it's going to be a neck and neck race, because 299 NDA now and 214 the India Alliance, whereas others, they stand at about 30. So it seems like it's going to be quite a close fight. But again, these are just early leads. These are not the declared numbers. So let's see. Let's give the market some time. Let's give the leads some time to settle down, and then we'll see what the market does. Of course, it's been a good 1.6% recovery as well, which we've seen just at an index level. And FMCG, that's your big mover so far at least.